What's up everyone, this is Kenny here from Property Stories, and today we're going to go through a bank of letter. So how many of you, right, when you get a bank of letter, you don't understand but you sign it anyway? Yep, I also do that. I ask the banker like what are the rates and what's my installment. Okay, everything checks out, I just sign. I don't ask so much, okay? But today I'm going to go through a few things with you. The first and foremost, like what are the checklists when you get your offer letter, what you should do. Second, we're going to go through a real offer letter. We're going to show you the terms and conditions, what they mean, the standard terms and conditions, of course. And next one is some FAQs I get, okay? And the last one is my personal point of view. Having been in the banking line for about 5 years right now, more than 5 years, if I were to take a new housing loan, right, what I will consider personally as a banker. So let's get started. So these are the contents. We're going to talk about checklist signing, what to bring, bank LO walkthrough. I'm going to do a conventional one, okay, and FAQs, my recommendation, okay, my personal point of view. So when you get your offer letter, right, these are the 8 things you must check for. First, your full name. Is it correctly spelled? IC number correct or not? Or if you are on apply using passport or any identification, you must check your passport number. Conventional or Islamic. If you're not sure whether the product is a conventional or Islamic product, please ask your banker, okay? Postal address. This one is where the bank is going to send you a letter, especially when in terms of a change of interest rate, revise your installment, okay? And also when how much they already disbursed, then you also will receive on this postal address. So make sure your postal address is correct, and if it's wrong, please go and change it. Please go and change it at the nearest branch. Don't just depend on the SMS. You might actually miss the SMS as well. Next one is the loan amount, property price. So why is the loan amount important? Example, let's just say a property price you apply is 500,000 and the bank only give you 400,000 loan, which is how many percent? 80% of the property price. But you wanted 90%, right? So 90% should be 450, right? So please check this one, whether it's 450 or not, before you even sign, okay? And then property address. This one, the unit number must be correct, especially if you are buying from under con. So the difference in unit number will be different unit that you are financing, okay? If it's a sub-sale, just check the correct address that is given, or as per the booking form. You already have the booking form, right, when you place a booking to buy a house, as per the booking form and the LO. Last but not least is any extra terms and conditions. The bank will say, this one, you want loan, okay, you want loan, we ask you to put 10,000 FD for 12 months. These are extra terms and conditions you will see in the offer letter if there is any. Please make sure your banker actually shows you this, because the terms and conditions, right, if you don't fulfill, the bank has the right not to disburse your money. Okay, so what to bring when you actually sign your offer letter? Of course, the verification documents are identity card and passport. Make sure you must correct. And booking form, soft copy. You want to check the address correct and the property price, all this, you have to bring your booking form, so you know which unit, what's the price, and how much the loan amount should be. For our next session, right, I'm going to show you the offer letter, an actual bank offer letter. Of course, I blank out all the personal details, and we shall see what the offer letter looks like and also the terms and conditions. This is a conventional loan. So the first one, the first page, they always have a letterhead. Usually have a letterhead to show that the bank, what bank it is. And also, this letterhead, right, is very important because when you got letterhead, then this offer letter is actually an official one. If not, it's actually a draft. Some lawyers, right, I know, they will not prepare the loan agreement unless they receive a letter offer with the bank's letterhead. Because they want to make sure that that is the official copy and not a draft. Who knows, you want to change other things, right? Or a customer want to change some other things inside the offer letter. So the bank letterhead usually will have the address of the branch, the phone number. These are standard details on the bank's letterhead. Some bank letterhead, just the bank name only also got. The most important next one is the reference number. You must have a reference number, okay? Must have a reference number. Every application, right, must have reference number, because every application, your loan application to any facility at all, not just mortgages, it will be linked to secrets. So the moment you key in secrets, right, This reference number will appear in the secrets as already. Okay, what's the date, full name, customer full name, postal address. This is a product name here. Application for what product name? This product name is very important, especially when it comes to official business with the EPF. They want to see this product name matches what you are offered on the offer letter and your withdrawal. Okay, then of course they will give you your money. Next one is the facility. See this facility here? Facility here consists of 1, 2, 3 and 4 parts. Okay, so housing loan facility consists of 4 parts, and then the housing loan for only the housing loan is 1274 400. CRTA here is actually MRTA. Okay, 41332. So total the total housing loan facility, which is inclusive of the MRTA, is 1315732. So what's the purpose? Housing loan to part purchase, to part finance the purchase of the property described as the security enclosed below. This is the interest rate. Next one, SBR plus 1.35. So SBR at this point of this offer letter is 2.25. So you roughly know when this offer letter was signed up. So 2.25 plus 1.35 is about 4.7, I think. Is it? Yeah, I think so. So it's just 1.35 plus 2.25 lah. Then 4.6. Sorry, it's actually 4.6 lah. So you can just, this is the one that will change. Now the SBR right now, as of this video, is 2.5. Next one is the tenure. So 420 months, which 420 months I divide by 12 is 35 years. Okay. Open all monies, first party assignment and power of attorney. First party, meaning one name on the loan, one name on SMP. If it's two name on loan, two name on SMP. We'll talk about first party and third party further down the video lah. The next video actually. Title details. This one the bank will actually do it, so you don't have to worry. What you need to check is this unit number and the development name. Yeah, I just residency Kayangan. I'm not surprised if there is a residency Kayangan. If there is, it's just a purely coincidence. So, credit using term assurance. Remember this one I mentioned, this one is MRTA, right? They will actually mention how much who is covered. In this case, my client is Mr. A here. The amount, the sum assured versus the loan amount. This is the sum assured versus the loan amount, the tenure, and also the amount, premium amount. So, bank finance here means the customer only come out a single cent. It is in the loan. Repayment, housing loan. Installment, upon full loan disbursement. Okay, upon full loan disbursement, monthly installment shall be 5515. Okay, if you are buying an under construction property, you will see this installment, right, slowly going up. But in the offer letter, they will write the full amount of the installment. As I was saying, right, if you are buying a new property, okay, the bank will take this 5515 as your installment, not the one in the secrets, whereby the disbursement is still happening and it's a small amount versus the loan amount that you apply. So in this case, right, what you need to do is to provide the new bank that you apply for. Of course, if you apply for different bank, then the offer letter that you get, okay, because they will need to add this amount into your commitment. Full loan disbursement for residential properties purchased from developer, okay, is at stage 97.5 for Peninsula. That means you now get a triple C, right? 97.5 is considered a full loan disbursed, so you have to start paying the full installment. While it's 95% for East Malaysia and vacant possession has been delivered. Okay. Oh, this part here, full loan disbursement, loan amount. Let's just say your loan disbursed between the 1st and 15th day of the month. Your installment shall be due on the 5th day of the following month. What this means is, let's just say now, as of this recording, is 11 of October. So let's just say the loan is disbursed today, 11 October. It's before the 15th, right? So your installment will commence on the 5th of November, which is next month, 5th of November. However, let's just say the next clause also say is after 15th of the month, your next monthly installment shall be due payable on the 5th day of the next following month. What this means is, let's just say your loan disbursed on the 20th of October, which is the end, right? And after 15. So your installment doesn't start on November. Your installment start on December 5th. So retention period not applicable. Retention period here refers to the lock-in period. Most of the banks have a lock-in period of 3 years upon full disbursement. That you can still, upon first disbursement, 3 years upon first disbursement, that you can sell. You can always sell, but you will gain a penalty, or you can settle, but you will incur a penalty. Penalty is usually 3% of the approved amount. No processing fee. The valuation here is not applicable. Okay, if under construction, of course, this part here is not applicable. So other standard terms and conditions, okay, this one, right, when they put here standard terms and conditions attached, right, the offer letter is only 3 pages actually. The rest are behind the standard terms, and we shall look at the standard terms and condition. If there's a conflict between standard terms and condition and this offer letter, terms of this letter offer shall prevail, but only to such extent of conflict. That means if let's just say there's a conflict between this standard terms and condition that we're going to see later and this offer letter, only that clause we will talk. And terms of this offer letter is the one that will override the standard terms and condition. Only for one clause, only for that clause that is extended on conflict. Others are all to remain. Okay. Submission or general sales and purchase agreement for price consideration of not less than 1,593,000. Remember the loan amount at the start. So the loan amount at the start, right, you must refer to only the housing loan facility. Housing loan facility divided by the S&P price. S&P price, you will get 80%. Okay, yes, this customer only takes 80% of the total S&P price. Number 4, in the event the purchase price in the sales and purchase agreement submitted differs from other document given for processing of the facility, the bank shall be entitled to vary the amount finance facility herein to ensure compliance with the margin of finance prescribed by the bank, subject to providing 21 calendar days prior of notice to you. Okay, what this means, let's just say the S&P price is lesser than what is stated here, 1,593. Let's just say the S&P price suddenly come at 1.4 million. 1.4 million. So what this means is that the bank reserves the right to reduce the loan amount accordingly to the S&P price. This one, right, if you buying sub-sales, you better be careful. Make sure the valuation can match the price, because the S&P price doesn't mean they will match valuation. If let's just say the valuer goes to the site and determines that this property is not worth this much, 1.5, suddenly the valuer just say, Kenny, this one I can only give 1.4. Then the bank will notify you and say, this is the value that we get, this is the S&P price, there's a discrepancy, so we will be following the one that is lower, which is the valuation report, 1.4 million. So you got 80% versus 1.5 million, right? Now we give you 80% versus 1.4 million. Okay, this is what it means. So this part here, this is the extra terms and condition. Current or saving account earmark of 40,000 for 12 months from the date of first disbursement. The current savings account earmark will be released upon expiry of the earmark period, subject to satisfactory payment conduct of the financing account and with no arrears. This one is the extra terms and condition that I mentioned at the start. Sometimes, right, the bank will impose this kind of conditions before actually approving your loan. So you as a customer, you as an agent or as a banker, you need to tell the customer this and see whether they agree or not. If they agree, then we can proceed. If they don't agree, then this one you have to maybe find a case, or you maybe ask a reduced loan amount. Maybe ask to reduce the earmark amount, maybe 40k become 20k or something like that. Or then you maybe increase the variation here to 12 months become 24 months, but half the amount. So you have to negotiate until you come to a middle ground. If you can't agree to a middle ground, maybe then you have no choice but not to take the offer. Alright? Very simple, everything also can discuss. In the event of any discrepancy or conflict between the description of the property stated herein and the description of property stated in the sales and purchase agreement, the description of the property stated in the sales and purchase agreement shall prevail, if applicable. What does this mean here? Let's just say you have made an error in the unit number, okay, but the unit number in the sales and purchase agreement is the one that will follow. The bank have to change and to match the property details errors according to the SMP. Let's just say it's a unit number change error or address error, you must change it according to the SMP. Number 7, this is how all banks actually cover their loopholes, okay, legal loopholes. Not nice to hear is cover their own ass, but that's exactly what it is. This such other terms as the bank may prescribe. That one is means what this means here. If you sign, right, you are subjected to not just now the terms and conditions, right, the future terms and conditions where the bank will introduce, you are also subjected to the same terms and conditions without the need for you to agree to it, okay? You only agree once here, that's what it means. This is actually very standard. Everywhere also they use this, especially in your employment. Sometimes they like put in, you see this term a lot, right, in your job description. Have you seen your job description? And also if you apply for a job, right, you will see this term, any responsibilities that is prescribed from time to time by the management on top of whatever that is given to you, your job description. So it's very normal here. Everywhere also they will have this kind of escape clause or to add more work without extra terms and conditions and consequences, okay? So this is the servicing branch, which branch, ABCD, then you got phone, usually got branch phone number, all this to contact. This part here, kindly signify your acceptance by signing and return to us the duplicate copy of this letter offer within 15 days from the date of this letter offer, failing which this offer will lapse unless extension has been allowed by the bank. Your offer letter is not indefinite, your offer will expire, so there's 15 days here, okay? You know, sometimes whenever we as bankers we tell you an agent that your offer letter is going to expire, you always think that we are trying to pull your leg and we are actually going after your sales and we want to close fast. Okay, that is true, we want to close fast, that because we also want the sale and want to move on for the next case, okay? But to say that we are actually lying, you can actually refer to your own offer letter, 15 days, okay? The offer will automatically lapse without us doing anything. Hence, if you want to buy a property, just make a decision once as the bank already come out the offer, which is about 15 days. You have 15 days to make a decision, which is more than enough time if you ask me. So now here is the name, full name, IC. You have to check IC number and full name must be correct. Then you sign. Okay, these are the standard terms and conditions. Okay, first drawdown of facility is to be made within 12 months from the date of acceptance of this letter offer or such extended time as the bank may allow. Okay, what this means is like today, let's just say today 11 October you sign the offer letter. So within 1 year, next year 11 October 2023, the facility must have the first drawdown already. Whatever it is, must have first drawdown. Sub-sales undercall must have first drawdown. Unless the special terms and condition is granted. What are the special terms and conditions? Sometimes, right, when the developer, the banks can actually finance the project for reputable developers without the APDL is out yet. So before APDL is out, they cannot disburse, much less sign SMP. So it might extend more than 1 year. Okay, that one is allowed, but subject to the lawyers actually writing into the bank and tell them okay. Full drawdown must be made within the completion time frame stated in the sales and purchase agreement, failing which the bank reserves the right to treat any undrawn portion as cancelled. This one is based on the SMP. If it's a sub-sales, it's usually a 3+1, 3 months plus 1 month extra to complete the transaction. Complete the transaction here means the key is passed from the vendor to the buyer. If it's an under construction property, then the first drawdown usually is within, like, they will have a billing, then it's a 1 month before the end of billing date, then you will draw down. If you haven't draw down within the time frame. Let's just say with 4 years, right? Let's just say 4 years you want to complete, and then up to 3 years only you claim, and the time's up after 4 years. You already passed the 4 years of construction period. The bank has the right to treat that the portion that you never draw down, right? Let's just say balance 100k, you never draw down, as cancelled. Okay. This one, land and financing within 3 years of from date of letter. Revise the interest rate prior notice at least 21 days before revision take effect. For this, land and financing and house construction is a bit tricky. So what it says here is that within 3 years from this date of letter, you must construct your land on the land that you achieve with the bank finance. If you not, we will revise the interest rate upward by giving you 21 days notice. These are the list of security documents that to be executed. There's a lot of documents here, A until H. The last part here is that documents, any other documents advised by solicitors. So it's a lot. Condition precedent to draw down. This one, before they draw down, that means they disburse the money. This is what they want to see. So these are the terms and conditions, but I'm just going to highlight this part here. Statutory declaration that the property is for owner occupancy. You will definitely need to sign the SD one. Okay. Receipt of official search report from official receiver, official assignee notice that neither the borrower nor the security parties are worn out or bankrupt. This one is the insolvency, Jabatan insolvency search, OA search. That will be done by your solicitor prior to the drawdown. Both parties, borrower nor security parties, that means the vendor and also the buyer must not be worn out or bankrupt. Next one, the last one, the very famous clause, satisfactory completion of other conditions imposed by the bank from time to time. So if the clause enough is not enough, not complete enough, this is the clause that they will refer to. Okay, unless and until they are happy with your loan documentation, they will not release the money. Usual hiccups, right, is sometimes is most of the time I see is about the insurance. If you need to go for medical checkup for the insurance, please just go. Second is the account opening. The bank says you must open an account before we disburse the loan. Most banks nowadays, they want you to open an account before they disburse the loan. So just go and open the account before they disburse. If you don't open, they have the right not to disburse. And if they have not received any news from your insurance company, they have the right not to disburse. Okay? Let's go to the next one. Number 5. Bank's right to cancel a facility. Yes, the bank actually has the right to cancel a facility even though you've already sent in the documents. Your LO, S&P, loan agreement, all you signed it, everything stamped it, but the bank still has the right to cancel. Even before not draw down, the bank has the right to cancel. So what are the 3 situations the bank will cancel? Number 1, any representation made by you during the application of facility, whether impliedly or expressly, whether orally or in writing, is later found to be incorrect, not true, or fraud. That means you give fraud information, which is or incorrect information, or not true, but you don't know. They say impliedly or expressly. That means you have no intention to cheat the bank, or no intention to cheat the bank has the right to cancel the facility. Okay. Omission of material or relevant facts which were not disclosed or misrepresented to the bank during the application of facility. Relevant or material facts. This one, it has to do with maybe your job, right? You have changed your job, or you have during the application, your job, you didn't declare that next month maybe you got reduced salary or something like that. This one is a very vague terms, material and relevant fact. Because when you apply for a loan, right, you just apply based on what you have right now. Who will think actually to think about the future, or maybe some things that you truly miss? But don't have to worry, right? This one is actually a very vague term, and most of the time they will just look at the top here, the incorrect, not true, and fraud is actually the biggest problem. Okay. In the event there are material changes affecting your financial condition, remember at the start there, you are not supposed to be bankrupt. But let's just say before the loan drawdown, then suddenly they check the OA search, the either the vendor or the buyer is a bankrupt, what will happen then? The bank can actually cancel the facility. No need to draw down. Okay. Cancellation letter will be issued with reasons. Okay. Stipulation as to interest. This is how the interest is calculated. Calculated daily, monthly, or periodic risk basis as indicator of letter based on 365 days a year. Mortgages, property loans is now calculated in daily rest. I've not seen any more money rest loan. If you have seen, please let me know. I want to see also. Now all of them, can say all of them is actually daily rest. The next one, we will talk about repricing or revision of interest rate. When the facility days past due is 91 days, the bank shall revise prescribed rate in the offer letter to prescribed rate plus 0.64% per annum. What's the prescribed rate? This is what it means is let's just say the rate is just now was 4.6, right? Now what happened is prescribed rate plus 0.64 is 4.6 plus 0.64, which is 5.04. Okay, calculated on balance outstanding or such other rate or basis of calculation of the default rate based on regulatory requirements. Financing rate will be reflected to contracted rate when days past due fall to 90 days and below. That means if let's just say you have 91 days, you totally never pay at all, the bank has the right to revise your interest rate upwards. And the moment you have paid, maybe let's just say you pay for 1 month, or you can afford it, you pay for 2 months, alright? The bank, after minus all the areas in the interest, right, then will revert back to the contracted rate, which is 4.6 for this off letter. Okay, the bank before revise your rate will provide a written notice not less than 7 days prior to the effective date of the revised money installment. This calls here cross default. Any default under this facility shall entitle the bank to declare an event of default under other facility or facilities granted to you by the bank. What this means? Let's just say you have a lot of facility. Let's just say this one is a housing loan, right? Then you also have a personal loan, you have a car loan with the bank, and also a credit card. Let's just say you default on your personal loan, you don't want to pay, or you can't pay your personal loan, right? The money you save, right, you pay on your housing and also your car. The bank can then declare a cross default across all the facilities if you default on your personal loan. So it means here is that the bank will declare that you have default on your housing loan and your car loan, even though you only default on your personal loan. Okay. These are late payment charges. So what are the late payment charges? 1% per annum on the amount in arrears till settlement of the amount in arrears. That means if you have any arrears, they will charge you 1% per annum. Not on the principal, in the arrears. So you settle the arrears, then it's okay, back to normal, regularized. Prepayment, partial payment, advance payment. These three here is all the account features. Nowadays, right, when you talk about loan account, you can actually put in extra money into the loan account to save the interest, okay? Which I highly recommend you do if you want to, especially if the house, if it's an own stay house and you plan to keep it for a very long time until the day you retire, or what you want to stay at house, like maybe a landed house or something. You can consider adding more and you can pay faster. If it's a property for investment, then not really you don't need it. Might as well just slowly pay and conserve the cash flow. And when time comes, you can refinance, but that shall be a topic for later. Okay, let's go down. Next one. MRTA, Mortgage Reducing Term Assurance, or Credit Level Term Assurance, or Credit Reducing Term Assurance, CRTA. You are encouraged to take out CRTA plans for insurance company on the bank's panel. Encourage, this word here encourage, but why a time we always, as a banker, we always say compulsory. It comes with MRTA. So because here MRTA, right, is actually part of it is the bank's source of income. It's a fee income for the bank. Number one. Number two is that at least you give the bank a security. If you buy MRTA, if anything was to happen to you, which is death and TPD, the bank's loan, the money loan, still we can claim from the insurance company. And thirdly, we as bankers, we are salespeople. So MRTA also means commission to us. We have some commission from it. If you don't take, is the management will either make our life very difficult by giving you the higher rate, or the approval will be rejected. So you have to take at the end of the day. So What you can do, right, as a consumer, I understand if you are an investor, you don't want MRTA, you want to buy yourself, also can, no problem. What you do is that you tell the banker, can I please have a minimum MRTA coverage? I have my own insurance coverage, no problem. Okay, the banker will be more than happy to oblige. Don't just go and say, I don't want MRTA. If you got MRTA, I don't take. Then I will say good luck to you, because most of the banks will have MRTA. Okay. This part here, you are free to use the service of non-panel insurers and takaful operators. This one, don't make your life difficult. Use whatever the bank provide. Okay. Why? Because if you want to use non-panel, right, the approval, number one, very hard to get. Number two, bankers such as myself, right, frankly speaking, we don't want the extra paperwork. Okay. So just use our panel insurers. If the CRTA policy is not finalized for any reason by the time any other condition precedent for this facility has been fulfilled, the bank may. Okay, this one, right, what it means is that, example, your medical checkup, you haven't settled, so that means the insurance company haven't come out with an answer for your CRTA or insurance proposal, MRTA proposal, yeah. So what the bank may do is that the bank will proceed with disbursement, but is receipt to your authorization letter to allow it to disburse the facility, knowing full well you are not covered. Okay, waive the requirement. This one, waive the requirement, is subject to increase the margin of interest above the interest rate. That means if the bank actually waive the requirement, they may increase the interest rate or reduce the tenure for you, varying the tenure of repayment of the facility and all the installments of the facility. That means they can change these terms. Then they waive the MRTA. This part, waive this MRTA, is no problem. If it's rejected by insurance company, of course we can appeal to maintain everything. Because it's not your fault, right? If it's rejected by insurance company, it's not your fault. But if it's not, then I would suggest that you just continue. Okay? Costs and expenses and fee. All costs and expenses including abortive costs, that means cancellation, stamp duties and legal costs on a solicitor and client basis incurred by the bank in connection with the facility, if applicable, or the recovery or the redemption of your account shall be payable by you on demand on a full indemnity basis. What this means is, once you pay the fees, you also indemnify the banks and all its employees from anything else, that means suing or any wrongdoing. That means the fees here is between you, the bank, and the lawyer. You as a client of the lawyer. Okay, you and the lawyer will be charging you. You want to cancel, right? A lot of times people think you want to cancel S&P, you want to cancel the loan. They have charges. Okay, valuer already do your work, lawyer already open file, do the work. So you have to pay these cancellation fees to the lawyer, to the valuer, if applicable, before you can cancel. If the bank actually impose a cancellation fee, then please pay the bank before they cancel the loan. The bank has the right not to cancel, or the lawyer has the right not to cancel your loan if you have not paid, or any parties you have not paid, they have the right not to cancel the loan. Okay. Next one, we talk about privacy clause. You can see here, you shall inform the bank or at any time to opt out if you do not wish to receive marketing communication from the bank or other members. Yeah, sometimes you get the calls from the bank, right, for personal loan, credit card, you get calls, right. If you feel that is annoying, or you feel that you don't want to entertain anymore, what you need to do, right, is you need to inform the bank in writing, or you can go through their official channel. Let's just say a bank email. You can just write to the email, say, I want to opt out of your marketing, kindly do not contact me again. That's it. Okay, don't go to complain to your banker and say, oh, your bank very pushy. Every time call me for personal loan, every time call me cash out credit card. Just email the customer service or give them a proper in writing saying that you want to opt out. That's it. The bank may use a credit reference agency to help make decisions on what it means here. Ramsey, CTOS, okay, to help make decision. You check details, manage the credit and creditor accounts on recover debts. Okay, recover debts here is they will pull your last known address and all the information to help them to accomplish these three objectives. Okay. We reserve the right to amend this privacy clause from time to time by placing such amendments on our website or notice at the banking halls or at a prominent location within our branches. That means if they want to amend this privacy clause here, these 7 items here, any 7 items, they have to notify you by placing those notification at the branch or website. So they can't just amend it without telling you, okay? Next one is insurance. Fire insurance cover is to be at sales and purchase agreement price or the full insurable value as per the valuation report. Okay, fire insurance premium is paid by you. Okay, if you are owning a high-rise strata development, you have a JMB, right? JMB every year will pay the fire insurance. You take the master fire insurance copy because the bank will charge you also. The bank don't have your fire insurance so the bank will charge you. So both sides will charge you. However, in case of any fire, you can only claim from one side. So what you need to do is to pick the JMB master copy of fire insurance, tell the bank I want to cancel since my JMB already bought for me. If you're buying a strata, okay, if you're buying a landed, it's the same thing. But remember, once you no more loan with the bank, please go and get your own proper fire insurance for your house, because in case of a fire, you are not covered. As long as there is a loan, the bank will every year automatically buy a fire insurance for you and bill you. So you have to pay the bank. That one you pay the bank because there's no JMB to buy that fire insurance for you. It's an individual title. So other terms and conditions, in the event the actual redemption sum, including insurance premium, legal fees, valuation fees, and or stamp duty, are less than the facility amount financed by the bank, the balance, if any, shall be treated as principal paydown of the facility account upon disbursement. This is very long, but what it's trying to say is that, let's just say your legal fees, okay? The bank finance, example 10,000 example, but come out the quotation are only 9,000. So where the extra 1,000 go? Just don't disperse the extra 1,000, then your loan amount, your total loan amount will drop by 1,000. Same goes with anything else like MRTA and your valuation fees, okay? Whatever portion you don't utilize, it was straight away reflected in your loan amount as a principal. Next one, 21.7. In the event the facility is cancelled by you at any time during the period between the execution of the facility agreement and of first disbursement, you shall be liable to pay all the fees, costs, expenses arising or incurred in connection with or incidental to the legal documentation, registration, and discharge of the facility, including solicitor's fees on a solicitor and client basis. So cancellation here got fees. All fees you need to pay, especially the lawyer and the valuer fees. Okay, if you buy subsale got valuation, they already do your valuation report, you have to pay the fees, then you can cancel. The next one, in the event of default of payment, solicitor and or valuer shall be entitled to recover the indebtedness or any part of it from you through the process of law. Example, today you just say, okay I want to cancel my loan, but I don't want to pay the lawyer. Okay, lawyer, I didn't get a loan, why should I pay the lawyer? But the lawyer already done the work, loan agreement, everything signed already. Now you say you want to cancel. So the lawyer has the right, lawyer or the valuer has the right to charge you. And if you don't pay, they'll go through the process of law, meaning here they can actually sue you in court, okay? And if you still don't pay up, then they have other means to recover, which is according to the law. So now let's go through some frequently asked questions I get about the loan offer letter. After signing the offer letter, the most questions I get is, what now? What to do? Okay, two things. Number one, most of the banks nowadays, they want you to open a savings account or current account so that they can debit that account for loan repayment. Please go and open, or else they won't disburse the money. Number two, if you have an insurance medical checkup to go to, please do so. Go for insurance medical checkup, get the results. They can also hold the disbursement if the insurance is incomplete. And number three, if you actually talk to the lawyer, right? When you sign SMP, you should talk to the lawyer, right? You can ask the lawyer, what's the completion date roughly? Make sure you get the completion date so that you know roughly when you will get the keys or when you were supposed to get the keys. If it's an under construction, maybe your APDR haven't out, maybe next year only you will start paying repayment the loan. Just ask the lawyer roughly when I will repay the loan, because we don't know when the construction stage, right? Especially if under con. However, other than that, right, other than these two, you don't have to worry as a borrower. If the bank is the one that is a bit slow in chasing and the deadline is near, it's the job of your lawyer to go and chase the bank. Okay, your lawyer will contact the bank, your lawyer will contact the banker. That is what they are paid for. You as a borrower, just make sure the time is within the time frame. That's it. Next question I get usually is, Kenny, I want to wait for bank A, B, C offer first and then compare, can or not? Of course can. You are the borrower. It's your right, or say, to compare, to wait for the offer and compare, see which one's the best. But remember, the bank also has the right to cancel the facility. As I mentioned earlier, your offer has a validity period, and this one I show is 15 days from the date of the offer letter. So after 15 days, don't come crack and cry and say, can I have the offer back? No such thing, okay? Or you want to compare, right? I give you a tip. Whenever we bankers, especially if you're dealing with direct bankers like myself, if you're dealing with mortgage brokers, they will always be able to find you the lowest, right? Because they had deal with so many banks. But if you deal with me, I have an employer, when I quote you something, right, that's the lowest I can give you. That's the terms that I can give you. It's a take it or leave it kind of offer, you know. So that's why there's no point in negotiating with me, asking me, hey Kenny, can you get me a lower rate? Is that the lowest? Yes, that's the lowest. You buy 1 million, 2 million, you take 1 million, 2 million loan also, if that's the lowest, that's the lowest. With MRTA, okay? With terms and conditions. If you don't agree to the terms and conditions, I also cannot do anything. Remember, ladies and gentlemen, we bankers, right? We are one maker for the bank. We do not decide the price. We just take the product and we sell. We just take the product and sell and see and find a customers that is suitable for the bank. Okay? That's what we do. And if you want to compare, right, my tip for you as a borrower, you do not need to so many banks. You have so many banks, you can just ask the rate upfront. If you see the rate is high, then no need to apply. Don't waste my time and your time. Because frankly speaking, if you pass to the banker also, the banker see or inside the securities got 5 other banks. So the chances of closing this deal is lower, right? So we are salespeople. We will definitely do the one that is the faster to have the higher chances to close. Customers will submit 2 banks or 3 banks at most. Then we'll see, okay, we have the chance to close this case, we will do first. Because at the end of the day, our target is running. Same to you as well, as a borrower. Your S&P, your booking got time frame one. Especially you buy sub-sale, you are supposed to get within like 21 working days or 14 working days, and then you exit and the owner don't extend, sell to other people. It's fair, right? So whenever you start doing this, right, you are actually robbing your opportunity cost. Straight away, fast, ask the bankers, what's your rate? Okay, you get the lowest rate, right? Just apply 1 or 2 banks or 3 banks at most will be okay. Because I understand, if you can't just apply with 1 bank and then expect to get approval, how if the bank reject? Then you got no deal, right? So I understand. Third one, I always get, I don't want MRTA, is it compulsory? Can you just waive the MRTA? Answer is no. Don't need to ask so many times. The answer is still no. If you don't want MRTA, you can find a bank that don't have MRTA one. There is banks out there that don't have MRTA, but you might not get what you want. Maybe the margin is lower or interest rate is higher. I don't know. But the fact is, MRTA is always compulsory with the loan that you are taking. You can just tell the banker, not I don't want MRTA, I want to buy MRTA. What you can tell the banker is, you can say, can I have a minimum coverage? I already have the insurance behind. I bought already. And I buy this for investment or I buy this for own stay. Doesn't matter. Can I have the minimum coverage? Okay. Then the banker will be like, oh, okay, I will quote you the minimum. Our minimum sometimes can be some banks. I've heard that minimum 2,000 premium done. Some banks okay, let's just say you take a 500,000 loan, your minimum sum assured must be 250,000, half the loan amount. Some banks, they count based on the loan amount. Okay, 3% versus the loan amount. If you take a 500,000 loan amount, the minimum premium must be 15,000. Some banks even better. Okay, right now, right, they want to compete. They have a product where they actually refund you the premium in full. If you tell them, This one for investment. I just want the shortest amount of time and I don't want so much MRTA. No problem. We refund you in full. Okay or not? After the end of the 10 year, let's just say the 10 years, 5 years, the MRTA, you didn't claim, I refund you in full. Also got open mouth and ask. Don't just say I don't want MRTA. When as a banker, frankly speaking, over the years, if I hear this, I know already the person is usually the first time home buyer. So the lesson here is open mouth and ask. Okay, if you don't ask, the banker don't know what you want, and we will always put the minimum or put the highest because our commission also there mah. And if you want to waive MRTA, why don't want to do is because the management will make our life difficult. Understand? So manager ask, why no MRTA this case? Oh, okay, no appeal rate, your rate higher. Then we cannot close the mah. Waste my time, waste your time to do the case. Might as well you just say take minimum no. Number 4, sometimes I get this kind of question. I don't like these terms or clause on the LO. Can you ask your bank to amend this clause in the LO for me? The answer is no, don't even bother. Okay, it's a standard terms and condition. The lawyers have gone through it, the legal team have gone through it. Who are you to think that you can actually ask the terms and conditions to be amended according to what you want? Of course, unless you have big cable, I got nothing to say lah. Your big cable, you won't go through small potato like people like me. You will direct text my CEO or chairman. I don't know. That one you settle yourself that side. Okay? If not, you take the standard terms and condition we give you, or you leave it. Don't take the loan with us. Simple as that. Or the third one, buy cash. So you don't have to be bound with the terms and conditions that you don't like. Okay? The last one, sometimes I hear like this. Sometimes customers will jokingly say, wow, the agreement so one-sided one. Where the rights of the borrower war? Everything also the bank win. Sure lah. We borrow you 500,000 not 100 ringgit, 200 ringgit Okay, the bank also running a business and the interest rate, of course, we charge you very little ma. And you ask where's your rights. You know that the bank is the most secure place where you can actually borrow. It's not like along out there. The most what we can do as a bank to recover our loans if it turn bad is to sue you. That's it. We sue you if you have a collateral like a car or house. We foreclose it. That's it. Okay. We sue you bankrupt. We cannot even send people to send red paint to your house lah. These are the things that we cannot do. We are bound by law. So the bank is the best place to borrow your money from. Okay. So that's where your rights are the borrower. You are safe, you are protected. You're protected from this kind of things, unorthodox methods of collection, I would say. We can just go through the legal means, sue you bankrupt, and we move on with our business. That's it. Okay? I really think this deal is the best deal ever, especially borrowing from the bank is the best deal ever. Instead of seeing the agreement as a one-sided, right, I would think of the bank as my partner, especially in terms of expanding my business, expanding my assets, expanding my investment, everything also. The bank is the partner because it's other people's money, and they are bound by law. They can't simply do anything according that is out of the law. I myself feel secure borrowing from the banks. Last but not least, if I were to take the loan right now, what I would do, knowing what I know right now as a banker, simple. What I would do is because I know how to analyze my own profile, this is what you should do as well. Roughly, you just ask the banks what's the DSR, and then according to your profile, then you count your own DSR. That's what I'll do. Second, I will look for the bank with the lowest interest rate. Yes, everybody wants a good deal, so I will start with the lowest interest rate. If I'm buying sub-sale or even under construction, I'll make sure that the bank can give me up to what I want. 90% of the S&P price means 90% of the S&P price. If 70%, then 70% of the S&P price. Then I will choose 2 or 3 banks that fit my profile. I'll send. I know which A, B, C. I know which one can give me the lowest rate. And even if, let's just say, the difference is also a bit minor, about 0.1 different, okay, 10 basis points, I'm okay. Once it come out, I just sign. Because I already prepared with that day. So there's not much consideration. In terms of accounts, right, the loan accounts, all the loan accounts, I don't know any banks that's money rest. If you know, please let me know which one is money rest. Because now, for as far as I know, Now the loan accounts are all counted as daily rest. So all daily rest, whether it's full flexi or semi-flexi, that's it, Nima. Full flexi, semi-flexi. If I want semi-flexi or full flexi, I'll just tell the bank, go to the bank with full flexi. That's it. So there's not much consideration knowing what I know now, especially when it comes to financing matters, okay? What I would spend more time on is actually the house search. The house search, and also making sure the budget is all in order. If it's a sub-sale, I will actually hire a building inspector. I will purposely hire a building inspector because I want to stay there for a long term, and I want to make sure that the owner, right, this can discuss and then rectify it before I actually proceed with the purchase or booking, okay? So it's part of negotiation. That's where I'll spend most of my time. Financing, not much. Just basics where I can get a loan, I will go. Because at the end of the day, I want that house. The loan is an inconvenience I have to go through to get the house. I do not want the loan. I want the house, okay? So keep in mind when next time you shop for new property. Speaking of completed properties, if you ever wonder what is valuation, how it is done, what is it all about, if you do, you can actually check this video that I've done. I put it in the end screen. So I'll see you in that video, alright? This is Kenny here from Hikai Hatana. See you. Bye bye.